Hello, this is the Chart Profit video. We're about 2 hours into the trading day on Friday the 13th of July. This from the pre-open today. We're looking at the E-mini S&P. The important levels down here in the longer term, that's 27.18. That's the important controlling price. That should be support going forward. Next level we are concerned with in the shorter term is 27.72. It's the minor controlling price. And I wrote on Tuesday pre-open that it would be fair to assume that yesterday's low at 27.72, that was back over here on Monday, should hold if this is effective buying. So we're looking for this level here to hold, which it did on Wednesday, 27.72, and a minor controlling price holding support is usually a reasonably positive indication. And pre-open on Thursday we talked about the next level here at 28.01, which is the 9-month value area high. That's the dotted line here, and that came into play on Thursday as we marked aggressive buying here up into that level. And I've said that price acceptance time at this level would be a positive. So just seeing how we're getting on with those two levels in the current trading day on this 30-minute chart. So here's 27.72, that's outside of ours, and here we are at 28.01 up here at the value area high, and we said the price acceptance like this or time around that level would be a bullish sign. These longer term value area highs will often stall a rally at least, so a positive would be price acceptance or time up around that level rather than a quick rejection. Here's the current spider chart. Big level here, as we've been talking about, is 271.70, which is the 18-month, and it looks as though we are attempting to break out above the recent high in May. You can immediately see on this chart here of the Russell 2000 ETF IWM, small caps have been outperforming the large caps over the last few months, breaking above the high from earlier in the year in May at this point here. Talked about this level here on the FTSE 100, the UK FTSE 100, 77.11. That's the 3-month controlling price, and still having a little bit of resistance from that level. Currently it's kind of today's high. Price printing time above that level would be a confirming positive for this chart. German DAX here generally held the 2-year controlling price. At this point we have a half range level here off this year's high to the subsequent low, and again price back above that level would be a positive. If it's going to happen, look at all these charts moving together. So we could see the DAX and the FTSE breaking above their resistance at the same time, and that would be a general confirmation. This is TLT, the T-bond chart here, holding above the major at 121, which is a positive indication, as we've spoken about before. And again, as we mentioned last Friday, which was here, you can see again today that this half range level off this high is resistance. So again, price above here would be a positive. We could see some short-term resistance from this half range, but as long as we hold above 121, the major T-bonds here in a stronger position. This is GLD, the gold ETF, the major, funnily enough, also at 121. Price printing time below that level is weak. Location, that major could actually migrate down a little around 119. Be interesting if that happens. Hasn't happened yet. So we can say that GLD is in a weaker position here since early June than it has been since the start of the year. Gold just can't seem to get going at the moment. Even when you think it would act as a sort of traditional safe haven kind of status, hasn't really done that, which is a little disappointing for gold bulls. Lots of reasons in the sentiment data, the commitments data, that say it's a little overdone here and you should expect a rally, but technically it's in a weak position, and I'd much rather see it back above 121 before looking at the upside. This is the dollar index. Currently keeps being drawn back to the 6-year controlling price from a 30-minute basis, which is 94.80. As I said last week, we're currently seeing the index oscillating around that level. I'm looking for a clear higher low above that level or a lower high below that level to maybe indicate the next directional move. If we're looking for clues for the dollar from the Euro FX chart, you can see the 1 year has just come into play here as resistance, and as long as the Euro stays below that level 117.55, that's more of a positive tick for the dollar. Price back above that level, and again a clear sort of higher low up here would change that assumption, but we don't have everything lining up. The pound here actually attempting or finding support at 131.70, which is its major, so we're just printing back above that level today at the high of the day. And the dollar yen, well, the dollar yen has cleared its 2 year, which was here at 111.30, previous resistance. We've just spiked above that level this week. In the short term, that looks pretty positive. The big level is up here at 113.70, and that is the major. Generally, we've seen that area of price as a barrier for rallies here, here, and here, and again here. Finally, a quick look at the sentiment. This is the public poll from AAII. The bulls jumped this week to 43.1%. Bears percent was lower at 29.2. It's down from 39.3. That's quite a fall. So the net bulls minus bears is now at 13.9. We've got the 4-week moving average in black here of that net position. It's kind of reset itself to neutral. I think the last significant thing that happened here was at this point 2 weeks ago when the net fell to a negative 12.4, and that represented a 1-week fall at that time of 24.9 points. That was the largest single weekly fall in net since 17th of November. Apart from that, we're pretty neutral, in my view, as is the Investors Intelligence poll. Bulls percent just above 50. Bears percent almost unchanged this week. It was actually 9 weeks ago in here that the 4-week moving average in black here fell to its lowest level since November 2016. This is a contrarian indicator, you'll notice we've been rallying from there. And even more recently in the LIPA US fund flow data, we talked at length about this chart. It shows equity fund including ETF flow. We've just had a 6th consecutive week of net outflows, which is telling a story on its own. But last week we talked about the 4-week net outflow, currently at 31.4 billion, but last week it fell to 39.3 billion. That's arrowed over here, and that was the largest 4-week outflow I have in the database. Again, a contrarian indicator, indicating that there's some fuel if this market should continue to break higher here. Okay, that concludes, and once again I thank you for watching.